Hello, and welcome to the market update for Tuesday, August the 2nd. If you have any questions during the week or any that I don't get to here in the live class, make sure you send those to Jerry at traderspro.com. Let's go ahead and get started. We're kind of at a really critical spot here in the market. I've talked about how recently I felt like we could get kind of that melt up type of move where the market starts taking off and people start chasing it. I still think that's possible, but there's a few things that really caused me to move more to neutral over the last 24 hours or so. Monday's trading really kind of spooked me a little bit about getting too aggressive with that mindset. But I'm going to go over some things. I'm going to show you, though. We're at a spot here where the market could go either way, and I'm going to present both arguments to you so that you can kind of see where we're at. And I'm telling you right now, just ahead of that, when the market gets in these types of conditions, you definitely want to back off a little bit, not get too aggressive, not try to guess which way it's going to go, because a lot of times, well, I mean, you could make the argument, well, I've got a 50-50 shot, but if you start using the 50-50 shot argument in your trading, is making your trading decisions based off of that, you're not going to have much success in the long run, because you're usually going to be guessing wrong most of the time. But let's go over some things that concern me. Let's start off with the direction alert. So this is kind of the starting point of what concerns me. We are still in a bear market. That long-term indicator hasn't changed for a while, but we're reaching short-term overbought conditions. Momentum not only has moved into the extreme range, it's over here on the right side of that extreme range. Now, could it get even a little bit more extreme? Yeah, and sometimes when you really when it really starts taking off, it can stay in that extreme range for a little while. And that would be the definition of a melt up, is that the market is already overbought, but it keeps going higher. So I get that. I understand that if the scenario that I think could take place happens, the market is going to look overbought. It's going to look a little bit dangerous to get in. And that's what kind of creates that panic buying, is what I call it. I know that's a weird term, because you would think that how can there be panic in the buying? But that's what happens, is that people are like, I don't want to buy because it's so overbought, and I don't want to chase it. But then you've got all these fund managers. You got to remember, these fund managers have to show performance at the end of the year. We're in August. We've had a bear market conditions for most of the year. We've had the market selling off, obviously more earlier in the year, but they've got to show a return now. And if the market starts taking off, they're not gonna have a choice. They got to get in and buy whether they like it or not. So I could definitely see where this could happen, but again, the problem is, and this is why I always have a difficult time in these melt-ups, is I'm programmed to look at overbought, oversold conditions and charts, and sometimes it's hard for me to ignore the years and years of experience that would tell me don't chase this, or start shorting in some cases. These type of melt-ups are tough to trade. Now, I've been through a few of them now, where I think I could do it better this time around if it happens, but and it may not. That's the point I'm trying to make. Is we may, because what I've also been talking about is we're going to get a big panic sell-off at some point that spikes that VIX above 40. Could that happen right now? I wonder if the sentiment in the market has turned bullish enough for it to create that panic sell-off right here. But it could definitely happen right here, and this is the area where it would likely start to take place if this resistance area holds. And again, I'll show you this. We're going to get to the charts. I'm going to show you all this, but that's a little bit concerning. We have to recognize this. Okay, we are now in an overbought state from momentum standpoint. Now, the breadth is still in the high area. It's not in the extreme area yet, and maybe that's what it's waiting for is. Momentum gets even more extreme and breadth gets into the extreme area here. But we have elevated levels right here. We have to recognize that. Sentiment, we already know is going to be an extreme because it's been high. The complacency in the market has been pretty high for a while now. So we're dealing with an overbought condition. Now, when we look at the buy-sell ratios, they're not showing too much of an extreme. This is a pretty wide range right here, but we've seen that it's gotten wider recently. Now, these were oversold signals, not overbought. Most of these wide ranges have been on the sell-off. So you could make an argument from a standpoint of, here was a buy extreme. That we're pretty wide for a buy extreme, where the buy ratios are outpacing the sells. But again, that could still get wider. I've seen it get wider. So, I wouldn't expect the market to drop just based off of that. But when you look at it in combination with all these other things, we're in this overbought conditions on the direction alerts. This sentiment indicator has moved above the overbought range here. It's above it. You've seen a few times where it's gotten up to it and then it's come back down. We're above it right now, so that's showing an extreme. Now, I didn't take a look at this before class, so sometimes that's a little bit risky to not. What they always say is you never ask a question you don't know the answer to when you're like in politics or something like that, or you try to make sure you know the answer to whatever question gets asked to you. Sometimes it's risky when I haven't prepared for something to start taking a look at it, but this backs it up as well. I mean, you're looking, what do you look for in these ratios? Do you start to get into double-digit ratios? Well, I really gravitate towards the Russell 3000. This is basically every stock that's publicly traded, at least big enough to really be publicly traded. We're not in double digits on that yet, so there still could be room for it to run. But we are double digits on some key ones. You've got the Dow. Industrials, actually Dow Industrials are not, they're far from that. We're not far from that. This wouldn't take there's only 30 stocks, so it wouldn't take too many more of these holds to go to buys to put that in a pretty extreme level. But S&P 500 right here is double digits. So you've got, again, could these get a little bit more? I've seen them get a lot more extreme than that at times, but you're definitely starting to deal with a market that's getting a little bit overbought in the near term, at least. But let's get into the charts here, and let me show you why this is kind of baffling me a little bit. Well, first of all, you can see on the SPY, we're in the extreme range, but again, we can usually it's when you get to the far right side that you really, it really signals an extreme level or overbought that you have to be very careful buying into something like that. But we've been talking about this high right here for quite a while, and we've reacted to it many times. We were really focused on it back in this area right here, back in March. Um, when we broke below it right here, that was a pretty big deal. We rallied back up to it here, and then had the last big sell-off was in June, and it was when it held in this range. So this is very, very significant right up in here. And so from this standpoint, we haven't broken above this yet. So we haven't broken above it yet, and we're overbought in the market. Okay. So that's what concerns me, is that, we haven't been able to show that we can push through this yet. And yet we're already kind of gone a little bit too far too fast. That's what overbought is. It's gone a little bit too far too fast. Can it get above that area there? Well, and it's like that on most of the other indexes as well. Now, we haven't looked at a lot of these other indexes because they've basically been saying the same thing. But now we're going to start paying attention to some of these different indexes, because there is one that's showing something different. The Dow isn't. The Dow is showing the same thing. It's up right up. Hasn't broken above this area yet. And look at today's move. We're moving lower today. Again, we haven't closed that way, and it's been up and down all day, swinging back and forth. It opened lower. It tried to rally about an hour ago, and then started to fade. But the Qs, this is the one that has broken above this area. Now, technology is viewed as being a leading indicator. That's why we look at the chip stocks, because the chip stocks are the leading indicator of technology. But you've got tech that has broken above that high. So is that telling us that the rest of the market is going to follow? That would be a bullish argument right there, as I would look at that. And that's partly why I thought we could break through that, as we started to see a lot of strength and outperformance from technology over the last couple weeks, or particularly the last week. Now, the candles, though, the last couple of days right here are this is looking like a little bit of buying exhaustion right here. So you got to keep that in mind. But that's what I'm trying to figure out right now. Is this a leading indicator? And by the way, leading indicators don't always work. It doesn't always mean that it's going to happen. We always look at things we don't ever focus on one thing. We focus on a lot of things. What are all these clues telling us? So that's why when you see some of these things happening, you gotta weigh them with everything else that you're analyzing as well. But that is something we got to pay attention to. Is that is the question right now? Is that a leading indicator that we're going to go higher? Now, I need more evidence of that, and I don't have that evidence yet, but that's something to pay attention to. And by the way, when we talk about leading indicators, it doesn't mean immediate sometimes. Sometimes it can mean, 2 or 3 weeks down the road, we start to see the result of that leadership. Sometimes it can be, in the case of the Russell 2000, it was months before we recognized that the Russell was breaking down, and it was not confirming the last part of the bull market in the other indexes. It was not confirming it. It took months before it played out. So again, that's another reason why we can't we can't assume that some of these leadership indicators are going to be immediate, but we do want to pay attention to them. We do want to tuck them away. Is okay. We did see the NASDAQ 100 break out above this high. See if that. So down the road, if we start seeing more bullish indicators, then that could be another thing that we could add to it. Is the fact that it did break out. But Russell hasn't done it yet. If we go to the IWM, it's up there close, but it hasn't broken out above there yet. And then I go back also to basic chart analysis 101. What do I teach you about trend behavior? Stocks will tend to alternate between impulsive and corrective moves. You get impulsive up, you get corrective is more choppy, more sideways. Impulsive is a strong directional move. Corrective is more choppy and sideways. Within a downtrend, it's the opposite. You get impulsive down. The upward moves are more choppy and sideways. And so when I look at the behavior, this is impulsive and this is corrective. This is choppy and sideways. And, I talked a lot about that back in here when we were thinking, is that wave A? This is wave B. And this is wave C. We started to move a little bit lower right here, and then we've gone higher. If this is wave C, it's starting to be a little bit too long. Wave C is usually supposed to be about the same length as wave A. We're getting to the point here where it's twice the length of wave A. It's very rare to get that long of a wave C. But this looks corrective. This looks choppy. This was impulsive. See what I'm talking about now? See how it's confusing? It's like it's not giving us a clear signal. Now, usually when this happens, you have to realize that the reason why this is happening is because everybody is trying to figure out what the market is going to do. All these traders are trying to figure out, do I start buying now, or is the selling done? Do I need to keep selling? Is this a rally within the downtrend, or is this have we bottomed and we're starting to move up? All of that indecision is showing up on the charts, okay? And so it's a reflection. This is a reflection of what everyone's trying to figure out right now. And so when I see something like this, I don't want to start assuming I know what's going to happen next. I want to be cautious, because I'm telling you, if this starts to drop, we could be down at these lows. Well, look how fast it took to get down there before. Stocks always fall a lot faster than they rise. 1, 2, 3, 4, 5, 6, 7, 1 week, which would be about a little more than a week in trading days, because there's only 5 trading days in a week. But week and a half is all it took for it to drop that dramatically. And that's where we're at right now. A week from now, we could be down in these levels again. Look how long it took to rise it took months to rise back up to these levels. It could take a week to drop. So, I don't want to be loading up, assuming that we're going to go higher and get crushed off of that. I also don't want to be buying and loading up when we're also overbought in the market. We're reaching some of these extreme levels. But I don't want to be shorting right here. I don't want to be betting that we're dropping, because again, wave C. If this is wave C, it's twice not only is it twice the length of wave A, but you're beyond that 618 retracement level, which was right in this area right here. You're almost at 100% retracement, which usually you're not going to retrace 100%. It can happen though, but so there's a lot of low probability in both directions, low probability outcomes that the charts are telling us and all that. So, and then you get to the behavior right into here. The reason why yesterday kind of freaked me out a little bit is because we had such good movement here as we're approaching this high, and then suddenly we open lower, which is fine. I don't mind if we open lower, but you better close higher, and we couldn't close higher. We tried to. We were up higher right here. I thought if we could push even higher into the resistance area a little bit better, I thought there'd be a better chance of breaking out above there, but we faded into the close. And then today, again, we tried it again. We tried to push higher again. We faded. Now, when we look at the VIX, the VIX yesterday also spiked, not spiked, but it moved up for the first time in a little while, moved up noticeably. So not only were we fading from the high right there, the VIX was moving up. So what does that mean? It means that professional traders were buying protective puts. They were starting to hedge a little bit or buy protection. They're not going to do that if they are fully confident that they don't need to. Now, they weren't doing it aggressively. We didn't see a huge spike in the VIX, but the VIX did move up in an area here. And the reason why I think that was significant is because what we've seen recently is we've seen situations where the market has moved down and the VIX has moved down. There's been no concern at all. And now we're starting to see a little bit of that concern showing up in the VIX. We'll look at the VIX chart here in just a second. But that's something I'm going to pay very close attention to as well, is do we get now we haven't really sold off from here. We're just showing buying exhaustion, but do we get a down day and get a really big spike up in the VIX? That would really concern me. And a down day where, if we close below the low of the previous day, which could happen today if we close near the lows of the day, could that mean that's a start of a bigger sell-off? Or could it just be that we get a pause, we get a down day or two, and then it pushes through? These are things that I'll be watching. And maybe we pull back a decent amount, we wouldn't want to go to a lower low right here, but pull back a decent amount and alleviate that overbought condition a little bit, and then we punch through. So what I'm telling you right now, what you're going to see me do right in this area here is I'm going to be flip-flopping a little bit. I might come across as being pretty bearish one day, and then suddenly I'm bullish again, or vice versa. And that's okay. Don't be confused by that. It's just, I'm just trying to get the trend direction right. I'm not trying to be a psychic or, some market predictor here. By the way, this gets me to another point here. You see a lot of people coming on TV right now, and they're making bold predictions. You see it on CNBC all the time. They're saying, "Oh, the market has bottomed. I'm calling a bottom. We're going higher." You see some people come on and say, "No, we are not. I'm calling a top. This is a bear market rally. We're gonna go lower." And they come across as being extremely confident in their bold call. The reason why they do that, and you better understand this is a reason why you don't listen to a lot of people on CNBC, or you got to be very careful of who you're listening to, is they're trying to make a name for themselves. People have made entire careers out of calling major tops or major bottoms. Everyone then flocks to them. They want to listen to them. They want them to tell them what's going to happen next. It's amazing that human nature wants a guru. They want a market guru that can tell them what's going to happen next. And when someone makes a bold call, they want to listen to them. I'll give you the latest example of that is Cathie Wood. Cathie Wood called a market bottom in 2020 after the COVID low, and loaded up on all these risky growth stocks, and they went sky high. And she was a genius, and she was making everybody money. She formed her own ETF, the ARK Innovation Fund, ARKK, and everyone was listening to her. She was on being interviewed all the time, and she was this genius. Well, look at ARK Innovation Fund right now. In fact, we short it all the time when we expect the market to drop. Let's look at a 2-year chart so you can see this. So I have to go back even further, but she was a genius in this big run up right here. All these stocks that she was in and touting and talking about companies I'd never heard of before. They were going through these huge, the stocks were doubling and tripling. And then she she kept holding on to these and saying, oh, they're still going to be fine. They're still going to be fine. They're still going to be fine. They're still going to, you watch, you watch, you watch. They're going to come back. They're going to come back. If you listen to her, you are no better off today than you were 2 years ago. Now, I'm not suggesting that she doesn't know what she's doing, okay? But the problem is that the problem I have with people like that is that all during this decline, she kept saying, oh, the companies are going to, companies are going to come back. They're going to come back. They're going to be fine. You watch 2 years from now, I'm going to be back on top again. Yeah, maybe that's true, or maybe it's 10 years from now. Who knows? Is she going to claim victory 10 years from now if these companies come back and see, if you would have just stuck with me? You basically, what she's saying is, if you were just stuck with me, it took 10 years for you just to get back to where you were before. Your money did nothing for you for 10 years. That's the problem I have with people that make these bold calls. They're trying to be right. They're trying to be a celebrity. They're trying to be worshipped. I'm just trying to get the direction right. I might have been the same way, saying, oh, these are great, these are great, these are great, these are great. But when they start doing this, I'm like, no, they're not. No, they're not. In fact, that's why we were shorting this thing when it was dropping. We were doing the opposite of the ARKK is the SRK. And this is somebody that just recognized this early on, that you're going to make an ETF on these kind of crappy companies now. I'm going to make one that's opposite of that. And this is what we've used when because this will go up when those things go down. So anyway, that's just a side note. I wanted to point that out because I think you're hearing a lot of people come out and do that. And what they're trying to do is make a career for themselves. So they could care less whether you're making money or not. They want to get a bold call that's right, that allows them to be worshipped on CNBC and on Wall Street. And so their interests aren't your interests. So just be careful. Because some of these people, they sound so confident that you're like, man, if they're right, I'm going to make a killing on this. And then, you could end up being really wrong. The point I'm trying to make is we don't want to be right. We don't want to be right. We want to make money. We want to get the direction of the trend right as best we can. And that's what we're trying to do right here. Is we're saying we don't have a clear trend direction, and there's arguments to both sides right now. So we want to be a little bit more cautious. Okay. Question: might it be a good idea to take 1/2 of profits instead of trailing stop for the rest of trailing stops are great, or however you want to manage your trade is fine. There's no perfect way to manage your trades, and I'm not saying that I would be jumping out of anything in this environment right here, but it would definitely be something that I would consider. Yeah, I would consider tightening stops or looking for price action that could indicate a reversal. Like if we had a big down day with a big spike in the VIX, that'd probably be a signal that I'd probably want to lighten up, maybe not get out of everything. And it could be specific to the individual stock. I think that's important too, because we could see a market sell off and the stock you're in could be going up still. And you don't want to just jump out of it because the market's dropping. You'd want to watch that individual stock and look for signs of weakness on it. But yeah, that's something that you could consider, or you could do what I do a lot is hedge it with some of these inverse ETFs. I use the SARK, I use the SOXS. By the way, neither of those, I'll have to look at the SOXS. Neither of them have really looked like I need to hedge yet for the portfolio, so I'm probably not going to do that yet. Maybe on Thursday if something happens. But remember, we could melt up from here as well. We could break out of this and really start taking off. And you don't want to be just jumping out of your trades just because there's a possibility we could drop. Because you could really make good gains on a melt up because you're already making gains because it's already rallied, and they just keep going up and up and up. All right, so let's take a look at some of the other charts here, and then we can come back to these charts again. Bonds broke out. I talked about this being a critical area here. Why was that a critical area? That was the previous lower high before the last lower low. So you have the lower low right here. What was the previous high before that lower low? It was right here. That becomes significant because if you break above that, now you've gone to a higher high. Now we barely broke above it yesterday, but we did go to a higher high. Again, though, the problem is that this looks corrective. This does not look impulsive. And so, by the way, these are things, what I'm teaching you and showing you are not things that only I know. This is what every chart analyst is seeing. Anyone that knows how to read a chart, read price action, is seeing these same things and analyzing these same things. And so, so what could happen is and this is why I said you got to be careful, is that we could get some of these signals that we're breaking out. You go to a higher high, and people think, oh, well, that we're bottomed out. This was the bottom. We've gone to a higher high, but because this is corrective, it could be a false breakout where people are buying. Suddenly, people start shorting this and could drop dramatically and really. So That's why I'm back and forth on this. It's like, okay, we're seeing some signs that we're breaking out, but what I like to see when I see a bottom, what I want to see is I'd like to see impulsive up, impulsive down. You get impulsive, corrective, impulsive down, corrective, impulsive down. I like to see impulsive up that breaks you to a higher high. And then you can look to confirm that. You look on the next pullback if it's more corrective. That's confirming that you're more likely in that trend reversal. We're seeing the opposite here. We're seeing impulsive down, corrective that goes to a higher high, and that's less reliable. But it's understandable because this is showing that the whole market can't really figure out what's happening next, and so nobody really wants to commit. And when you get that, you get a lot of sideways movements. And by the way, that's why it's going to be really important when we finally take off in a direction. We want to trade that direction because it's showing that after all this indecision, somebody or usually it's a group of very influential traders are now committed to a direction. We want to follow that direction, whether it's up or down. We want to be following along on that because we've been so indecisive for the last couple months. There's a question here. I don't really talk much about option trades in this class. The Tuesday, Thursday classes, I do have a class on Wednesdays. I talk about options, but typically, well, right now I'm not in any option trades because I'm trying to. Because if you're an indecisive market, you're moving sideways. That's the worst thing for an option trade, because if you move sideways, your time decay. You're going to lose money just in time decay, and so you want to wait for more of a directional move. But typically, when I finally get that directional move, I usually try to go out about 7 to 18 days or so in that range. Is usually what I look for expiration dates. All right. And and you look at TLT, so we did break out yesterday, but then look at today's move. We've almost reversed that move. We're back down below that previous lower high. So this will be something that maybe on Thursday we'll have a little bit more clarity on. Are we seeing more of a impulsive move down or a sharper move down in bonds? We'll see. Gold, I'm not going to spend too much time on gold, although, again, we did get a little bit of an impulsive move up through here. We're looking at this as being more corrective for a move down. It's shown a little bit more of a spike up or a sharper move up. A little bit bearish candle today, but what you want to look for here is does it look more corrective? Does this look like an impulsive move up, and this looks more corrective? That could maybe signal a potential trend change in gold. It's still a little bit too early for me to characterize this as a trend reversal just yet. But that is something to look for. Oil had a big dip yesterday. Now, again, this is a reflection of a lot of indecision as well. I've been looking at this as a potential bullish ABC pattern. I still have my USO. But I think I'm gonna move my stop to below here. I think we had a little bit of we had to drop down, but it was a little bit of a bullish reversal candle because we closed higher than where we opened. Although that's a little bit more of an indecision candle, more of a spinning top. But it happened right at a support area. We did move a little bit higher today, but we were off the highs of the day, so that's not looking real great right there. Could it be this is a little bit of a bearish ABC pattern and we're ultimately heading lower? Could be. I think I'm going to move a stop up to right underneath here just in case. I think I had my stop down below here before. I think I'm going to tighten it up a little bit in case because if we are going to go higher, we should go higher from here. We shouldn't go back below this low. That's what I'm looking at with oil. The dollar. Now, what did I talk about in the dollar? We had impulsive up, we had impulsive down. This is more corrective. I said we probably have another move down. We had that move down right here, and we moved to what used to be resistance back in here, and now we have a pretty sharp up day in the dollar. Based off of this behavior, I would assume that we're going to have another impulsive move up in the dollar. It's going to keep trending up. Off of that, we'll see. But this looks like an ABC. If this is an ABC correction for a move higher, this is how it would look usually. Now it could still dip below this, although this is a key support area. It can still dip below that and still go higher. But that's what we'll be looking at right here is does this hold as support? Had a pretty solid up day here. Is there a continuation of that? By the way, if you're not aware of that relationship, the dollar and commodities tend to move in the opposite direction. So I don't think it's a coincidence that we're seeing a little bit of weakness in gold today. We're seeing a little bit of weakness overall in oil recently with the dollar strengthening. That's going to put although the dollar and oil have been rallying together for a little while, and that could still happen. You just need to be aware that that is a relationship that typically happens where they're moving in opposite directions. And then the VIX. So you can see here the VIX spiking up yesterday. It's still up today a little slightly. I think it is still. Maybe it's now it's actually down just a little bit. But and you're getting a little bit of an indecision candle right there. We'll see how things close. The close today will be interesting because all this could change. We rally into the highs of the day or even push higher or something like that. That might make it a little bit more likely that we could possibly break out higher. But you can see this is what I was talking about. That was a pretty good rally in the VIX off of not a big drop yesterday in the S&P. So that kind of spooked me a little bit when I saw that. All right. And then, by the way, when I'm looking at the chip stocks, I'm usually comparing those to the NASDAQ 100. The chip tends to be a tech, heavily weighted with tech stocks. And a lot of times the chip sector will lead. And that's partly why I turned bullish a little while back, was because we did break out of that. We did go to a higher high right through here before. Now, I got to be careful here, because we did break above this high right here, and I thought this was looking more impulsive. It didn't look as corrective as the other indexes did, because this is impulsive, this is corrective, this is impulsive, this was a little bit more corrective. So it wasn't, the difference was the S&P was looking more like this, where it was more choppy, more sideways as it was rising. This looked more direct. Now, although this did go to a higher high right here, and what I was looking at was that this was the lower high prior to the lower low. So here was the bottom right here on chip stocks. This was the lower high. This is the one that we're looking at on all the indexes, though. Okay. And so we haven't gone above that in the chip sector, but I felt like this was because we did go to a higher high right here, that maybe this was leading the way, and it still could be, because this could have been leading the way, and now we saw the NASDAQ 100 breaking above this high. Anyway, I still am watching this, because if we start to see chip stocks really peel off and start selling off, I think that could be a signal to pay attention to, that maybe we're heading lower. And again, if these continue to move higher, especially if the chip stocks break above that June high, I think that that would confirm a breakout or confirm a rally there, if that were to take place. Transportation stocks, they're right up against that June high, like the rest of the market. But again, this looks so corrective up through here. It just makes it, I wish it was a little bit easier to read there. Bitcoin was, I've been leaning a little bit more bearish. Here's what I feel about Bitcoin. Bitcoin is right now is going to be considered a risk-on trade, meaning that you're going to probably have, and you could say, well, what does Bitcoin have to do with the equity markets? It's different from equities, from companies. Why would you think that it's going to rally if the stock market rallies? Well, know what's driving a lot of the Bitcoin speculation. There's a lot of it that are 18, 19, 20-year-old kids that are hearing all these millionaires being made on cryptocurrencies, and they're just buying it on Robinhood. Okay, they have no training, they have no idea. They see the stock market go up and they go into Bitcoin. Okay, so it is tied to the stock market right now, and it's because of that, because it's a lot of these untrained traders and investors getting into it, speculating in it, then it's going to be viewed as a speculative group. And so what you have to understand about speculative groups is that when the conditions are more bullish and people are more optimistic, that's when they're going to get into more speculative things. That's why we look at the small caps, is when these big fund managers are feeling confident that the markets are going to go high, that the economy is better and the markets are going to go higher. They go into the small caps because that's where you're going to get $10 stock that goes to $30, right? You're not going to get, you know, Goldman Sachs going from $200 to $400. It's possible, but it's not as likely to get a double or a triple in these big behemoths. Okay, you're more likely to get it in these smaller companies that are growing, and so they speculate when they're confident. They don't speculate when they're not confident. And so I'm going to remain more bearish on Bitcoin unless I start seeing the market. The market breaks off and breaks up right here. It has this melt up that's a possible outcome. Then I'm going to be more bullish on Bitcoin. But as far as the chart, again, it's the same as what we've been looking at. Is this a corrective move for another move down, or is this showing a little bit of a bottoming process? You know, is that a higher low? We went to a higher high right here. Is this a higher low? I guess if we can break out above here, that would maybe look a little bit more bullish. If we break down below here, that would be more bearish. So those are probably your two key points to keep an eye on then. And I'm using GBTC. That's because the company that's what they do. Is it's basically a proxy for trading Bitcoin. If you want to trade it like a stock, this is a company that is buying and selling Bitcoin, and so the chart tends to move with Bitcoin, same as Bitcoin, not exactly, but pretty close. And so that's why we look at it to kind of analyze Bitcoin. But I'll tell you one thing. I'll be the first one to tell you that I am not an expert on Bitcoin. My brother is. He trades cryptocurrencies all day long. That's all he does. He doesn't get into equity markets. But I just don't understand it, to be honest with you. And I could, if I really wanted to invest time into understanding it. But because I don't understand it, I don't have a lot of confidence in it. However, to be honest with you, I could trade it because I could trade a chart, and all I need to do is understand the chart. But if you're looking for cryptocurrency advice from me, that's pretty scary. I'm probably not the person you want to be listening to, because I don't, like I said, I don't understand it. I don't put a lot of time into understanding it. So there's probably other people out there you probably want to be listening to. But like I said, I'll tell you what I think the chart is telling me. And then if you want to use that to make your decisions related to Bitcoin, that's fine. But if you want to get more of a fundamental view, or, you know, any other reasons for wanting to invest in any cryptocurrency, I'm not the one you want to listen to. There's people out there other people out there you should be listening to as far as that's concerned. Okay, but I do throw it in here because I know a lot of people trade cryptocurrencies. I'm going to give you my opinion on the chart, and then you can take that for what it's worth. All right. So market update class. What's our conclusion after analyzing all this stuff? Well, again, it's the way it's been for probably the last couple of updates, which is we could really go either way right here. I don't want to be adding a lot, but if we do break out, I think we could add some and try to ride that melt up. You'll probably see me increase some holdings. Because that could be an outcome. And by the way, if we do break out of this and melt up, I think that's going to be the setup for the big panic sell-off. So I don't believe we bottomed. But I talked about this a little while back, where I said what in my mind would create a panic sell-off. Okay, if that's what I'm expecting, what would create it? Well, because the market has been a little bit too bearish lately, it's hard for it to sell off when so many people are bearish. So what could really cause panic is when if they think it's over and they start chasing. For one thing, they don't know why they're getting in, only for the reason that they're afraid of missing out. Okay, so they probably don't have a really good plan. They're just getting in because they're afraid of missing out. So they're already being emotional there. And then if it reverses sharply, they don't have any conviction because they didn't know why they were getting in the first place. They were afraid of missing out, and that creates panic because that's when it's like, I don't know what's going on. I just went all in because I don't want to miss this. I got to show a return by the end of the year. And now I can't lose any more than I've already lost. And then that's just sell, sell, sell. I don't care what price, get me out. And that's what creates that panic. So in the meantime, if we break out of here, we want to ride this move because I don't know how far it'll go and how it could go very sharply to the upside. But then I want to start looking for reversal signals that, do we see a day where the market is up and then the VIX is up? That tells me that professional traders are really scared to buy, but they also don't want to miss out on the rally. So they're going to buy protected puts and they're going to buy stocks. That's a show of concern. That's when I would start wanting to tighten up stops on those long positions. That's when I want to start to look for maybe something to go short, although it'd just probably be those inverse ETFs. Lighten up on some positions. I might take profits and lighten up on the portfolio positions. Those are things that I'd start doing. All right. Let's take a look at the portfolio. Lilly, what's my stop in Lilly? I think I had it down below that sideways range. 310. Yeah, so we're still a little ways away from that. So here's kind of the breakout area. We've been kind of moving sideways. My stop is if it gets down below that range. So I'm not too worried that we're down a little bit right here. And this gets back to whenever I show you these sideways moves. A lot of times I'll say you could wait for the breakout to get in. That's something I could have done. Wait for the breakout. I just felt like through here, this was when it was going to break out because the market was moving up against that, up towards that area there. I thought it could break out of it. But this is what can happen. It could stay in the sideways range a little bit longer. And that is the benefit of waiting for the breakout is you're not tying up your capital while it's moving sideways. So now, again, the other argument, though, is that by getting in here, and I talked about this when I got in, I said, my argument is if it does break out, sometimes when it does break out, it makes these huge moves. And so if you got in before the breakout, you get that huge move on the breakout. Whereas if you're waiting for the breakout, it breaks out right there and you get in and then it comes back down and tests the breakout area. So I made that argument. That was one of the reasons why I decided to jump the gun and get in a little bit early. But you just need to understand the pros and cons. And right now, it's still moving sideways, but that's all right. We're not stopped out yet, so we'll just let it kind of play out there. Raytheon still moving higher. Had a little bit of a bearish reversal candle yesterday, and it did trade lower today off of that. And usually that's what will happen off of those. You'll get some sort of downward move, but then it's now punched back up again. I still think at some point these defense stocks are going to really take off. It may just mean that the market conditions need to get better, but these companies are going to make a lot of money for the next few years as everyone starts ordering all these weapons. Oil, I talked about oil. I'm going to move my stop up in oil. So let's look at yesterday's low was 74.01. I'll just put it 74. Let's move it up to 74. And, sometimes I might not necessarily move up the stop, because I don't place an actual stop loss order at that price. I've talked about this before, but it's worth bringing up again. If you know you can stop out of a trade, you've got the discipline to do it. You can take the loss, because when you stop out, it usually means you're taking a loss. If you know you can take a loss and you trust yourself to take a loss, you don't have to put an actual stop loss order in. You can, in this case, really what I'm going to do is just wait to see if the chart closes below, and I usually like to see a closing price, but does it close below this low? If it does, then I'd go ahead and stop out. But if you can't trust yourself to do that, then put an actual stop loss order in. So you might consider an actual stop loss order at 74, okay, to where it automatically does it and it takes that decision away from you, okay? Because otherwise it trades below here and you're like, oh, I'm going to give it another day. That's a pretty big loss right there. I still think it's going to go back up, and then it goes down lower. Well, it hasn't gone below this low yet, so okay, it comes down to here. Well, it still hasn't broken this yet, and then it breaks below there. Well, still, I think this is a corrective move, and it's going to go back up. You start playing those games, and next thing you know, it's all the way, you're taking huge losses. And that's why a lot of you are probably already here, is that you've suffered through that type of behavior. And everyone does it. That's human nature to do that. And so the way you start dealing with it is take that decision away from you, put an actual stop loss order in, and then after a while, when you get used to because you're going to be wrong, you get used to being wrong. It's part of it. Nobody likes to lose money, but you're also making money because you're disciplined now. Then you don't have to always have those actual orders in. You can start trusting yourself to just go off of the chart, or just be able to place that order later on when you know I know I'm wrong. Sometimes I'll change my mind too, just because I know how to read price action. I might have a stop down here and the stock might move up and then have a big, really wicked bearish reversal candle where I know it's going to drop. Well, I can't know, but there's a high probability it's going to drop down a little bit for the next few days, maybe not all the way down, but I'll jump out of it just because I know I'm probably going to get a, $3 or $4 drop. I don't want to, why stay in it during that? And then with the intention, I can jump back in as well after it drops. Maybe it drops down here and has a bullish candle. I can jump right back in again. But again, I'm also over 20 years of experience doing this. So I know that not everyone would be able to do that. Until you can trust yourself to do that. You're gonna want to have just going to stick with just a basic trailing stop method. And by the way, if you want to get some ideas of different trailing stop methods, I have a training on that. If you go to the YouTube channel and type in Traders Pro, subscribe to Traders Pro channel, and there's tons of recordings and different trainings I do. And one of them is talks about different exit strategies, trailing stops, target exits. There's a lot of different ones that you can consider, and there's no perfect one anyway. So don't view those and think that those are the only ways to manage trades. But it gives you some ideas and some ways you can at least get started doing that. The SPY, again, this is one that I'm in it because maybe it melts up, but if we do get if it looks like it's going to reverse and drop, I may just jump right out of that. And who knows, that could happen tomorrow. So I would say that if we got a close below the low of the previous day and a little bit of a spike up on the VIX, I would probably go ahead and stop out of the SPYs, even though my stop, I don't know if it's down here or right here. I can't remember where I put it, but I think it was right here. I'm just trying to trade that momentum move, but I am getting concerned that we're in this, we're getting extremely overbought. We could see a decent pullback here pretty soon. and I can always get back in. If I get a bearish reversal candle or a bearish signal, it drops a little bit. Like I said, maybe it drops down into here and then it comes back up again. I could always buy the breakout and jump back in it again. So this is one I might be in and out of a little bit. There's a lot of these I'll be jumping in and out. By the way, that's a type of behavior in a bear market, choppy market, whipsawing market. You got to be kind of in and out, in and out. I know a lot of you are wanting to just be long term, just get into some things and ride trends up. I'll be that way when I think we bottomed, and I think that we're going to start trending up. Maybe not I'm not trying to pick the exact bottom, but when I really feel like we're showing some of those bottoming characteristics, I'll be getting into trades that I'm just going to be staying in, and the class is really going to get boring because we're going to be waiting a lot of time, or at least in the portfolio, because I'll load up on the portfolio and then I'm not going to get out of them until I need to get out of them. I'll still have stocks that we'll talk about in class and that you could add to your portfolio, but there's not going to be a lot of moving in and out at that point. You're letting the trends go as long and as far as they want to go. And so this is more of this kind of back and forth behavior is more of what you do in a bear market. That's why you see me jumping into those inverse ETFs and things like that. All right, so that's where we are with the portfolio. I am going to check the SOXS. Yeah, see, it's showing a little bit of selling exhaustion here, but it's not showing that it's going to go up. So, and again, the market's not showing yet that it's going to drop. It's just showing buying exhaustion. But if we do see the market start selling off, I might, and we see this have a nice strong move up, I might jump into this to hedge the portfolio a little bit. I've been using that a lot. I've also used that SARK, but this one as well is down a little bit today. It's not showing yet, but if it does start to have a move up, I'll jump into this because this looks impulsive right here, and this definitely looks corrective. This is looking like it's getting ready to make another move up, which means that poor Kathy Wood, her fund looks like it could have another drop possibly. So we'll see. All right, real quickly, any new stocks? Let's go into the muscle stocks here. I'll get into the sectors on Thursday in the stock specific class, but let's give you a couple that I liked under the new buys, under the muscle stock new buys. This CTIC right at the top of the list, 99 strength ranks. It switches over to signals here. Again, you could wait for the breakout, but I like how you have impulsive. This is corrective. Impulsive. This looks like an ABC right here. Corrective. More of an impulsive move right here. Higher lows, higher highs. A little bit of a bearish candle today. A little bit of a bearish inside day. So this could be one, like I said, you could wait for it to break out, because you look at it this way. The whole market is close to breaking out. If it breaks out, this will probably break out with it. That might be a better entry, confirmation entry on something like that. Another one I liked was this LQDA 98 strength rank. So, you have your basic lower, there's a lower high right there, then you had a higher low, and then you had this really sharp impulsive move up that went to a higher high, and this looks corrective. So it looks like it could be turning the corner. Now, these are always risky because you never know for sure if they're turning the corner, but it's starting to behave more like an uptrend, especially with that impulsive move up right there. So for some reason, this thing really took off. And what I like about these really big, I don't like to buy on these days where you get the really big move, because you're likely to get this. You're likely to get the corrective move. So I'd like to wait to get the corrective move to buy in. This is a better entry point right into here. It's consolidated that move. But what I like about this move is it wasn't a big gap up. I don't like big gap ups. But the news came out during the market day somehow, and this thing shot up. I don't know what the news is. You can go research it, but something caused people to be very bullish on this thing right here, and it broke it out to a higher high. Now it's showing a corrective move, which should follow as another impulsive move up at some point. But like I said, it could happen. It might not happen until if the market breaks out. It might need that boost from the market. And then lastly, this WMK 94 strength rank. And again, this is just one that you have this big run up right here, and then you have kind of this, looks like again a little bit of a bowl shaped move. Now, what's critical on these is that you continue to get higher lows and higher highs. You had a higher high right here, so I'd actually like this a little bit more if it could break out above here, confirm that higher high, confirm that bowl shaped move. But that's one that kind of caught my eye when I was looking at some of these charts. All right, that's all I have. Have a great week. We'll see you on Thursday for the stock specific class. Bye now.